Yo, what's up, investors? Welcome back to the channel. Today, we're actually doing some deep analysis on ticker symbol EPD, or Enterprise Products Partners. Now, this one I've seen a lot of people talk about on YouTube as a popular dividend stock. Now, there is one risk I will point out later in the video that may not be that big of a risk, but I'll talk about it later. But anyway, let's deep dive into the numbers. I'm going to show you all the stuff you actually want to look at, all the important numbers and ratios. So, first off, the dividend yield is 7.61%, and that's really impressive because, as you know, whenever the stock price goes up, the dividend yield is lower. So for it to still be yielding 7.6% is crazy because, hey, who wouldn't want a 7.6% return on like an S&P fund on average every single year? And they do that just in dividends. So let's actually deep dive into their numbers. So check this out. Their net income, this isn't that bad. It's down 3% from 1 year ago. Their total revenue, though, is down 12%. So that should say something. Look, the total revenue is down 22%, but the net income has stayed the same. So, wow. Let's actually look at their balance sheet. Look at this. They've stayed the same, the exact same amount of assets. Assets have just slightly grown, but the ratio's been the same. It's still at 59%. So you still own the same amount of equity, but we really want to be looking at here at their free cash flows. So wow, check this out, $1.72 billion. We can zoom out and kind of see their average. It looks like they were making a lot back in 2021, and now it's starting to recover. I don't know what happened here, but anyway, $1.72 billion, all right? So let's see how much of that their dividend cost. So their dividend from that only cost $1 billion. So wow, they're spending $1 billion on their dividend. We can also see like their normalized diluted EPS. How much is their total debt? So they have total debt of $28.92 billion, okay? And that's the same from 1 year ago. And how much cash do they have? Okay, so only $171 million of cash. You know, I wish they had some more cash to pay off more debt, but these dividend paying stocks often don't have that much cash on them. They only keep what's necessary. If we go to their total common shares outstanding, this stock isn't diluting you at all. So you actually own 0.2% more of the company. It isn't much, but if we go to their stock retirement program, they didn't buy any stock back in the most recent quarter, but it looks like they usually buy back a well, sometimes over $100 million worth of their own stock. So yeah, that's pretty good. But remember, the market cap is like 50 billion, right? Yeah, $57 billion. So to be buying back stock and to be paying out this insane 8% dividend or 7.6% dividend is crazy. So you're not being diluted, and the dividend seems safe. Because remember, their dividend only cost $1 billion, and well, they're making well over that in free cash flows. Even on their worst quarter down here, they could just barely afford it, but that was a one-time expense, it looks like, because the next quarter, as you can see, it went up like crazy. So it looks like they definitely make well over $1 billion, and they can easily afford the dividend. Now, what was the risk I was talking about earlier? And here's actually their dividend growth. We'll look at that real quick. But what was the risk I was talking about earlier? And that's actually that this stock is a LP, or a limited partnership. Now, what does that mean? It's actually taxed differently than any other stock. So they own like pipelines, and these kinds of natural gas, oil transportation stocks give you something called a K1 tax form. And those are notoriously hard to fill out. And some accountants charge like $100 or something just to do them. So if you want to buy this stock, I recommend that you buy it in a Roth IRA. Remember, I'm not telling you to buy the stock. This isn't personal financial advice. This isn't financial advice in any way. I'm just giving you my opinion. I think you should try to avoid the K1 tax form and buy this in an account like a Roth IRA. All right, so let's check out who's owning the company. So it looks like insiders own a large amount of this company, 32% of it. And another cool thing about this app that I'm using, this is called Webull. If you want to download it, use my affiliate link in the description. I would really appreciate it. And we can actually see all the different ETFs that own the company. So for example, this Global X MLP ETF, EPD, is 12% of their portfolio. So if we look at how this ETF is done, for example, we can see it's almost done the exact same as ticker symbol EPD. Like the stock price looks the exact same, but this is just an ETF, and that one just happens to be their second largest holding. And there's a ton of different ETFs like this, as you can see. But we can see the institutional activity. Looks like 1,400 institutions are in this stock. But anyway, that doesn't really matter. This doesn't really change the fundamentals of the financials. All right, so I'm now going to show you an investment that you might want to look into if you want to put this in a taxable account and don't want that K1 tax form. And I am actually looking into this ETF right now. It's ticker symbol AMLP. And what they do is they own a ton of MLPs, just like EPD. EPD is in this ETF. And they don't give you a K1 tax form. They give you a 1099, and a 1099 is the same as what any other stock would. So you won't have any issues with your accounting and your taxes. So if we actually look at the assets under management for this ETF, as we can see, it's at an all-time high at $7 billion of customer funds. But if we actually go to their top holdings, we got ticker symbol ET, Energy Transfer, and they got tons of other popular ones in here. And they're all LPs or MLPs, which is a limited partnership, as you know, and they have to give out those K1 tax forms. But this ETF right here doesn't give you that, like I said earlier. But they do have an expense ratio of 0.87%. That ratio is really high. And what does that expense ratio mean? That means they take out 0.87% of your initial investment every single year. But don't worry because their dividend yield well covers that. Check this out. They have a dividend yield of 7.82%. So the dividend yield well covers the expense that you would get, and it covers the expense of the K1 tax form that you would have to have if you want to hold any of these companies right here. So this Illyrian ETF actually owns another ETF known as ticker symbol ENFR, and this one is just like that one. They don't issue the K1 tax form, just a 1099 like any stock and ETF would. And we can see their top holdings. And of course, you can go in and look at these for yourself. Remember, none of this is financial advice. I'm not telling you to invest in anything. I'm just showing you what I find really interesting. Like these ETFs are so cool, and as dividend investors, I think it's really cool to just know about these. Now, there is two things that sucks with this. One is that it's at all-time highs. Like, look at this. You want to invest in it, but it's at all-time highs. But even at all-time highs, it has the super high dividend yield. Not this one though. This one yields 5.64%. But there's one thing I want to talk about with ticker symbol EPD that you might want to know that is that investors aren't really loving the idea of investing in oil and gas. Now, yes, I think it's still going to be here for the next, uh, 10, 20, 50 years, but I think there's going to be a slow transition to green and all electric energy. Now, remember, this is oil and gas transportation. I don't know how this is going to be affected because I'm completely wrong right now because look at the stock price. It's at all time highs. But I'm just acknowledging the fact that, hey, aren't people transitioning to all green, all electric, no oil, no gas, no fossil fuels? Am I right about that? I don't know, but the stock price is at all time highs. So it speaks for itself. It's done very well. And that's kind of my thoughts on ticker symbol EPD. They can easily cover the dividend and they're not diluting you as a shareholder. So, these are all pluses. So, in my opinion, I really like EPD and I like the AMLP ETF. So, thank you guys so much for watching. If you did enjoy, don't forget to drop a like on the video for me. I always forget to say that. It really does help me out if you drop a like. Also, check out my two previous videos up here. I would really appreciate it. These are some dividend stocks to buy and never sell. They're that safe. These are some cool picks. So check out this video up here.